Good morning, it's Jonathan Barratt with the this week debrief. It's for the start of November, the 1st of November today. So let's get straight into it. This week we do have quite a lot of data, particularly out of Europe and particularly in the States, which is going to culminate in the unemployment rate, which is something we'll all obviously widely watch. We've also got a lot of bank announcements in terms of interest rates this week, certainly in Australia on Tuesday. Followed by Wednesday in the UK and Euro, and I think also we're looking for a little bit more lead from the Fed in terms of its quantitative easing. But anyway, let's get into the debrief, the weekly debrief, the week ahead report. Let's first of all have a little bit of a recap. The Dow was up 4 at 11,118. The S&P was down 0.52. The Nasdaq was up 0.4. Looking over at Europe, the top 50 was down 54 points, or 0.54, sorry. The FTSE was down 2, the CAC was down 1, and the DAX was up 6.9. The local market was down 16 at 6,000, the local market was up 17 at 4,664 points. So quite not too bad in terms of the numbers. We did have GDP out on Friday, and it wasn't a bad number. We were actually expecting a number that was a little bit less, and so if anything there, the number was a little bit less, but in fact it came in pretty much on target on expectations. So if anything there, probably expect the market to take it. I would have expected the equity markets actually to go a little bit stronger actually, but they didn't for some reason, which is quite interesting I think in itself. Okay, let's just have a quick look at some of the other data, where they all closed, just have a look at the currencies. And you'd expect with the mere fact that we are looking this week to have quantitative easing, that the dollar was weak, and this is in line with expectations. The euro 139.61, the pound 160.45, the dollar yen 80.30, the Aussie 98.49, the dollar CAD 101.90, and the dollar Swiss 98.27. Just have a quick recap of some of the commodities, and as you'd expect with that, gold had a good lift to the top side, and let's just see down the bottom there, gold is up 15 at 13.57, silver is up 0.68. 24. Copper was down, and this is an interesting one. I don't know why copper was actually down. Copper was down 5.4 at 373.35. It might have something to do with terms of industrial strike and that premium being wiped off if they've come to settlement, but we'll have to check that. On the commodity front, rough rice took a little bit of profit taking. That was down. Soybeans were pretty much up a little bit, 12.36. Sugar was up 0.41. Wheat was down a fraction, 7.17. Cotton was up 3.58, still very strong at 125.26, and coffee very strong, up 3.48% at 2003. But let's get into just a general feeling of what numbers are coming out, and this week's going to be very important, I think. Apart from all the noise we've got concerning interest rates this week, we do have quite a lot of good data which should actually give us a good clue as to whether or not we're really motoring ahead in terms of signs of recovery. Okay, I guess the most important one on Monday today, we've got the NAB Business Conditions Index and some RBA data, which I think will be very important. Obviously here, give us a little bit more of a clue as to what the RBA will do on interest rates, and I think that's obviously going to be, obviously we'll find out on Tuesday. The market just, I guess, feels that they're going to look to increase rates, but I'm going to go that they're going to leave things unchanged. The other argument that they will push interest rates up is that this will be the last opportunity until February. So if they feel that we've got a little bit of a lift, then they will certainly act. The Aussie, as you can see, is always is benefiting from that. Okay, now the other bits of data, personal income in the US, personal spending as well. Also the ISM index in America, which I think will be quite important. Moving on to Tuesday, I guess the most important thing there, RBA cash rate target. Remember, it's currently at 4.5%. If anything, it'll move to 4.75%. We'll just have to see how that unfolds. Also, we've got PMI across Europe, which will be very important. And that's pretty much it for Tuesday. On Wednesday, we've got Australian building approvals and And I guess if anything there in the States, we've got quite a bit of data. They also PMI again, other parts of Europe. And if we go to the US, obviously the ISM factory orders, the FOMC rate decision there, expected no change whatsoever. So expect everything to remain relatively steady. Would be an interesting move. They did push rates up, but I think at the moment we're all sort of focused on the quantitative easing side of things. So let's see how that unfolds. Really, the size of that is what we're actually focusing on. Size of the easing as to whether or not it's going to be needed. And my feeling is that it'll be half of what is expected because they feel that there are signs that things are recovering. On Thursday, retail sales are certainly there. PMI out of Eurozone PPIs also. Bank of England announces its movement on interest rates. Remember, they're 0.5%. Expect nothing too much there. Expect them to stay pretty much in line with what. Also, we've got ECB announces interest rates in Frankfurt. So that's pretty much about that. All that on interest rates during the week. But I guess on Friday, which is the key, PPI out of the UK, industrial production in Euro, retail sales as well, a whole swag of retail data and factory orders out of Germany. But the key, I guess, is we move on to the States. It's going to be a big Friday night. We've got unemployment, not change in manufacturing payrolls, Fed Honex speaks. We've also got pending home sales, consumer credit, and the like. There's a lot of the Fed ministers are actually talking, so it's going to be interesting to see whether they make policy adjustment in terms of quantitative easing, and they're just going to try and back things up during those speeches. So if anything there, I think it's going to be quite an interesting read. Lots of data to get our heads around, so let's just wait and see, but I think it could be fun. But that's about it from me from the Week Ahead report. Have a good week, happy trading, and we'll certainly talk to you tomorrow. Take care, bye.